Hey everyone, let's stick with us versus herd. If it's your first time here to the content, hit subscribe. If you want to get notifications for when we post videos, tap the bell. If you haven't yet subscribed to our options trading live channel, we go live 30 minutes before market open, Monday through Friday. Link is below in the description, as well as the link to the Discord and our options trading group on Facebook if you want to join our community, the UVH fam. If you made money today, comment below, got paid. If you lost money today, comment below, learned a lesson. If you could do me a big favor, hit the like button. I'd really appreciate it out. It really helps out my videos. YouTube says, hey, go check out this video. So I really appreciate it if you could hit that like button. So getting into it, I'm up a couple $100 today. You can actually ignore Costco. I'll kind of go over that in a second. This is a bad print. I'm not actually down 284. Sometimes that close option pricing gets a little crazy. I am in a call spread for next week. I am short Costco, but sometimes when you're trading a little bit of illiquid options, you get a bad print at open or close or throughout the day, and oftentimes it happens at close, and that's what it is. I'm probably down about 80 bucks on here, so that's kind of where all my profit is. If you pause the video and kind of we're adding things up here, so I'm actually up a couple $100 on the day. Had a relatively good trade on Netflix, not Tesla, on Netflix today. But I'm kind of going to go over with you what trades I put on, what I took off, and what I'm looking at. First off is JP Morgan. I made $51 on JP Morgan. Had a nice premium crush on JP Morgan. We're going to get into the banks here. I am trading some other financial ETFs and banks for earnings. And what I did with JP Morgan today is I pretty much just went for the premium crush. You know, I was thinking that JP Morgan, and my thought's the same for the other banks as well. My thought, if you watch the video from last night, you know, my thought was that JP Morgan, you know, was going to probably come back to like the 95, 90 area, and that's exactly what happened. You know, I closed it out when I was selling the JPM 98 put and 98 call, so I had a at the money iron condor, and then I had the 103 call, and I bought the 93 put. But basically where I was making money was right at the 98 strike here on the put and the call. So at not at open, but pretty close. Let me pull up JP Morgan here. Let me pull up from yesterday. So I got a 395 credit. I sold it, or I bought it back for a 344 debit. So that's where I made the $51 on that. And it was a relatively safe trade. I took that off at 8:53 in the morning, so about 20 minutes into market open. It was coming down around here. I closed it out when it was right at around 98 because I got the premium crush. I got what I wanted out of it, and I got out. So probably could have milked it a little bit more. But when it came down in here, I took the trade off because I felt like that's all I was going to give. And you know, it did come lower, but I pretty much needed it to stay at the same price. Now going into tomorrow, well, first off, let me get to my other trades here. Looking at tomorrow, I also am trading Bank of America and Goldman Sachs. As you can see here, I have a couple orders here. One on Goldman Sachs, I did a butterfly, and I will pull this up. Goldman Sachs, so that's down a couple of bucks right now at close. What I did, it kind of looks like this, you know, and the chart is pretty much the same thing. I'm thinking for Goldman Sachs that this is going to come down to like the 170 area tomorrow. That's what I'm looking at. The expected move for tomorrow is around $12, $10. It says $12.86 on Tastyworks, but $9.28 on Thinkorswim. So not sure which one. We'll just call it like 10 or 11 bucks. We'll just call it 10 or 11 bucks. We'll meet in the middle. How about that? But I'm thinking it's going to come down around 170, maybe even 163 area. And you know, it may not happen tomorrow, so that's why I am selling a premium 10 days out. I have the 10 days out strike, and what I'm looking at on here is, if you kind of run the analysis with me, you know, if I'm looking at tomorrow, and let's say we have a 20% IV crush tomorrow, you know, basically I need it to be below the, you know, basically below like 178 area. So right now it did close at 178.23. Yeah, it closed at 178.28. Sorry, 178.23. So I basically just needed a little bit lower. If we push up into like the 190s, worst case scenario, I'm gonna be down like $200. So we do have some time on this. So if it pushes up to 190, like the 50-day, if we push up to the 50-day moving average, we'll be down a couple hundred, but I do have a lot of time on it. We do have till next week on it. So my target for tomorrow is actually like the 170, 168 area. So if we drop, $8 or $9, I'm thinking we're going to come down here to the 170 area, kind of like JP Morgan did today. JP Morgan yesterday, it was around 98, came down to 95. So that's kind of what I'm thinking. I'm thinking the banks are, JP Morgan had an awful report, lowered guidance. Their revenues are down their profits are down 69% from a year over year, and things aren't, they're tightening up lending. Things are going to be a little bit rough for the banks here. They're preparing for war with the lending, so I'm looking at kind of shorting these pops here, and that's what I did on JP Morgan. Now JP Morgan was more of a neutral play. Goldman Sachs, the reason why I went more bearish is because we popped pretty hard, and I think it's going to come back down. This thing popped a lot harder than if you're looking at JP Morgan or Bank of America. Now, speaking of Bank of America, the trade that I have on in there, as you can see, let me pull up Bank of America on the chart here. Bank of America chart, pretty much the same thing as JP Morgan, so I also went neutral on this, but what I did was I sold a short Strangle. So I have a short Strangle on it right now. I am short the 23.5 put and short the 23.5 call, so I'm naked. I'm short naked, or I have a naked short, I guess you want to call it. And if you look at this coming into tomorrow, implied volatility was actually a little bit higher. It was at like 100%, came down a little bit, 94% at close. So if we think, generally, if I'm looking at a 30% Ivy crush tomorrow, we're going to probably be making, as long as it's above 22 and below 25, I don't think it's going to move 10% or anything, which is why I felt comfortable, selling in there. If it comes down to 23, which is just down right in here in this area, if it comes just down to 23, we're going to be making like another $50 or so. I did get, the maximum that I can make out of this trade was $1.53. So if I take 30% off of this, 40% off of this, that's a good trade, pretty low risk trade. I think like JP Morgan, things for Bank of America are priced in. I think Goldman Sachs is going to go a little lower, so that's why I traded that way. Now, for Netflix today, Netflix I had a really solid trade on. Let me show you this trade here. Day trade. So for Netflix, I actually bought the 400 call 30 minutes into market open today. Bought it for $9.50. Sold it for like almost 40% profit at $13.15. Sure, I wish I kept it, but on Netflix was kind of chilling this morning, and it looked like it was going to pop up, and when it popped up to like 408, I sold it. I sold these big thick candles here. We popped from 400 back up to 408. Obviously got a little choppy here, and if I held that call, let me get that 400 call right now. Right now it's going for like $17, but if I held that call, I sold it for 13. Went all the way up to $20, so I left $700 on the table. A lot of people get angry about that. I definitely don't. I'm absolutely glad that I took the profits. I locked in 40%. I take profits, redeploy capital. That's what I'm about. So I'm definitely glad that I stick to my disciplines. When you get sloppy and get greedy, a lot of things could have happened. This could have went up to like 410. You're like, oh man, I'm printing money, I'm making money. Oh, you're so dumb that you sold. And then this could have, this got a hard reject at 410, and then you sell at 403, and then it goes back up. So that's why I don't like to get like sloppy with it. I like to stick to my discipline. I made 40% in 30 minutes here. Bought it at $8.59, sold it at $9.28. So who am I to complain? Making 40% in 30 minutes, So that's why I don't have any regrets that, oh, you didn't get the full thing, you didn't go up to 20. But yeah, I also didn't have the risk. My risk was off, and I was able to chill. I was chilling. But going into Netflix has earnings on Tuesday, next Tuesday, not this Tuesday, next Tuesday the 21st. And Netflix, they have been running, Netflix is one of those stocks that have been known to run before earnings and is doing it here. As you can see, they had earnings over here. It was running, and then it kind of stalled out before earnings, like down in here when it sold off. It ran before earnings, popped up and sold off. So, I mean, I definitely think that Netflix is probably going to sell off on the pop. But, I mean, who knows? Maybe earnings will be smashing. Who knows, you know? But right now, there's no resistance. Netflix hit all-time highs today. So I'm going to be looking for probably another day trade tomorrow, depending on what tomorrow brings. If this pulls back down to 400, I definitely wouldn't mind playing that 400 call again. I think that would be a lot of fun. But yeah, that was crazy. And the way the S&Ps moved up today was pretty big. What else? So XLF. If you guys have made it this far, haven't pushed the like button, hit the like button. I'd appreciate it. XLF, I'm also shorting. It's a small position. I'm short. I have 2 of the 22 puts for May 15th, so I'm about a month out on these bad boys. XLF, it did cost me $1.05, and what I'm looking for, you know, due to the weakness on banks, you know, and what they're doing, it did pop up. If it popped up at 23, I like to add a little bit to my position, but it hasn't yet. It looks like it wants to, but it hasn't yet. You know, probably won't tomorrow if the bank earnings are bad, which, I mean, I'm guessing there are, but, you know, we're still in a pretty confirmed downtrend here. I definitely think that it's going to revisit the 2021 area. I'm not going to get greedy with it. I have the 22 puts. If we come down to the 20, you know, I'm definitely going to be taking my profits. I'm not going to try to milk it down to 18 or 17 or anything crazy like that. I'll be taking around my profits around anywhere between 20 and the 21 strike. I have a lot of time on it, so pretty much just going to take it easy on XLF, but I'm just kind of shorting the financials in general right now because I think that they're going to be struggling for probably all of 2020 based on what their guidance is. And now that, you know, the majority of banks after tomorrow have reported, you know, they're going to kind of let that settle in and see what happens. I mean, obviously, you know, maybe the Fed will pop them up, but I'm not looking for ginormous gains here. Just looking for it to come down 10%. But anyways, I mean, that's kind of what I'm thinking of for tomorrow. SPY. Well, XLF's not for tomorrow. SPY. What I'm targeting here, I've been saying is I think it's going to hit the 288, 290 area, test the 50-day, and let's see what happens. If it rips through, I mean, this could definitely go to 300, you know. But, you know, is this ramping up for another leg down, or what's going on? I think that, you know, a lot of things have to happen for us to go back to all-time highs. Now, the only thing is the Fed is definitely helping out. You know, really, there's a lot of factors at play here. Is when people go back to work, is everyone going back to work? Is the economy going to be buzzing again? We don't know. We have no idea. We don't even know when people are going to go back to work. I mean, they're saying early May. It could be mid-May. It could be only a certain amount of people. It could be everybody. You know, we don't know. So right now, the market is all about speculation. So trade safely. Definitely trade safely. But I'm definitely think, you know, I've been saying this for a few days. I definitely think that we're going to be testing this 50-day. It was a couple days ago 290. Now it's 288. So I think we're going to be testing anywhere between the 288 and the 290 area. So that's what you want to be careful about. Also, Amazon. Amazon's absolutely parabolic here, and you know, you just want to be careful with it. You know, you just want to, if you're trading this, I mean, the best thing is just to buy and hold. I mean, now that it's broken free, I mean, sure, it could pull back down here to the 2150 area, but you don't want to get in front of this train. It's running everybody over if you keep trying to short it. So as you can see, I mean, it had 2 gigantic back-to-back days. So, you know, you definitely want to be careful of that. It's starting to move up a little bit after hours as well. Tesla, I am short Tesla. So Tesla, I mean, we're at max loss here. So Tesla, I'm short a call spread, thankfully. My max loss is like 235, 240 right now. And you're asking, why didn't I take this trade off? The reason why is I'm already at max loss. What more do I have to lose? I don't have anything to lose. Sure, I'm risking assignment fees and stuff like that, but I think it's worth the risk. You know, if I'm already at max loss, I'm just going to kind of ride this until either I get assigned or maybe it'll come back. I mean, I've had a lot of trades like this that, you know, have come back to me. Obviously, 3 days is not a whole lot of time here, so I need to basically come back to like the 620 area, which, you know, is basically saying you want Tesla to drop 100 points. And it could definitely drop 100 points, but not likely. But I'm just going to hold it because there's no reason for me to really get rid of that position being at max loss on Tesla. Now, if I ever trade Tesla within the next 3 months, definitely hit me up and call me stupid, call me dumb, because I should not be trading Tesla anymore. I've had like 3 back-to-back losses on Tesla, and at that point, it's time to call it quits. Pump the brakes on Tesla. GTFO, leave it alone. There's a lot of other stocks like Netflix and SPY that I'm profitable on. Tesla, not working out. So why continue trading that product? There's really no reason to. So I'm going to see what happens with the banks. Let me know in the comments what you guys think. If you watch this video to the end, comment below, watch to the end. As always, stay safe, stay green. It's us for cert.